Hi everyone, and thanks for checking out my channel. I'm going to look at natural gas and go ahead with some analysis about what could be ahead of us for the week and what had happened over the past week. So there's been a lot of noise around natural gas, and so many talks about some major break out to the upside with a continuation of the price up. I'm gonna give some probably more a little bit of a more moderate approach to this. I'm holding short on natural gas, not with the best average price, so I'm not of course entirely objective here, but I'm trying to give a technical picture that's actually showing why I believe we made a top on that level at 295. First reason I have is when you look at the quote report, this is not really technical but pointing to who's actually supporting that move. The week before we got short covering pushing that price to the upside, which I believe was due to many traders did actually attempt to actually catch bonds on that trend line, so we're sitting roughly about 2.60 and many didn't exit, but some did, and it did trigger quite a large short covering on that break above 260 because it was really highly unexpected at that time of the year to get such a push, and the configuration was extremely bearish as well. So yeah, many traders got caught, including managed money and large funds, and that did trigger that big move to the upside when we did actually go from 255 up to 274. So it was quite significant. And then what happened last week when you look at the quote report is not actually supporting again that we're having a massive accumulation or major positions from large traders actually pushing the price to the upside, but instead, as we can see here, we're having a dropping open interest, which is quite big actually. We also having the swap dealers, they're actually increasing long, reducing short, so they're actually edging against lower price. We can see the managed money that did load up short, that continued to load some long. It would be interesting of course to know where they did actually load. Very likely they caught that move here on that trend line, attempting to actually make it up for the loss the week before, and then they did start actually reducing here. That's a theory only, it might not be the case, but that's what I think would be the most logical thing to happen. We can see here the retail traders have been quite confused, like many, between long and short. So it's quite difficult for people holding short during that time, but just a reminder that it is almost normal with natural gas moving to extreme like this. If we look at the trend also, we can see here that the managed money is not extremely accumulating short, but if we look at the big picture here, over the past few weeks, that entire move that did actually go, I think it was in April, there was that move to the upside 2.8. The management did somehow follow that move, but not really with sharp positions or big positions, but just following it. And then on that drop down and up again we got, and they did actually reduce the exposure as we've seen. So there's some sort of a divergence. It's not very impressive, but usually when we get that kind of divergence, as we can see here, then it does mean that a reversal could actually come soon. So anyway, back to the technical. As we can see here, as we approach that major resistance line at 296, I got some sort of a rising wedge. It's a bit more obvious on the hourly here. It did actually break one side, and we got that hourly bearish divergence that's actually capping now any attempt for the momentum to actually break higher. So we likely fail again onto 96, as we can see here. This would be the fourth touch. We need to take something very special to actually break much higher than this. If we look on the 4 hours, divergence is a little bit less obvious, but we have really a strong rejection above 296. So it's not a very deep divergence. They could only potentially come back down to 280 somewhere and meet some more supports on the trend line, but this is a weak trend line, as just explained in another video of WTI. I don't really trust this trend line too much. They're just giving some level of reference. But as we can see, we're having, of course, a very large gap here. It's kind of hard to justify really at that time of the year to having such a rollover gap. And of course, the gap I was mentioning from almost, is it a year now? No, not yet. But September, we got that huge gap here. It's never been closed, and I think it is very unlikely that we're going to see that gap closing in another year time. So we will see. At least seems a bit short, of course, to drop to 214. That's extremely pessimistic if you are actually in that market. But of course, in trading, everything is possible. So yeah, let's see what we have in stock for next week. Of course, we're having that gap here that is also calling for 306. That would definitely not make it up for short orders. Are we going to fill in? Well, I would tempted to say no, but of course the pressure is definitely here. We will see. There's really no certainty here, but definitely many things pointing to a reversal from here. We could definitely see another attempt to break higher before getting some proper rejection that will hopefully break that trend line for good. I think 250 is the target that is expected by many, so there will be major support in that area and buying pressure, but we are likely at that point here to arrive a bit too late to actually break lower. Summer will start, cyclonic season as well, some pressure on the upside for the production, and then pretty much we'll have to see what the next plan would be. So yeah, that's about it. I wish you safe trading. Hope you get something out of that analysis, but natural gas is not the most the clearest I could make, but that's what we have at the moment. And if you are stuck with short positions, just let's keep your stop loss not too tight, just in case we get some spike to the upside. But in case the momentum does actually start catching up above this, yeah, the question about taking losses or letting that trade run and taking the risk of more losses to the upside is, of course, will come on the table. So thanks for watching. I wish you safe trading, and I speak to you soon. Cheers, bye.